Welcome to thestockminer.com. I'm Brian Johnson, and I hope you all had a Merry Christmas. It was a good Christmas here at the Johnson residence. My family, my wife's whole family live here in town, so we don't have to drive anywhere or fly anywhere to see relatives or family. Works out pretty good, and over the years we've developed a way where a lot of times we don't have necessarily Christmas on the same day, so we're not running from house to house either. It works out pretty good. Anyway, we are now preparing for the last week of 2010. Can you believe it? 2010 almost done with. And coming off of a 3-day lazy weekend, you can all but expect, I don't know if we'd see a whole lot of volatility coming into Monday. People are going to be slow to get back to their desks. I'm sure they'll be wandering in as opposed to their bright and early Monday morning. They'll probably wander in. That whole getting serious about work stuff doesn't come again till like January necessarily. So anyway, looking at the charts here, you can see where we're at and where we left off coming into Thursday's trading. And that was we had just touched on the Dow, the 60-period moving average here on or the 20-period moving average on the 60-minute chart. Sorry about that. I've got to get back into the flow of things as well, as we tagged it and moved back up right at the very end of the day. If you are an Elliottician type person, this looks like we could be in a 1, 2, 3, 4, and maybe one more little move here to the upside, getting us in or around that 11,600 mark. As I will say, I'm not real high on going long the markets right now, whether it's buying stock or options. I'm still sticking with my futures if I'm going to do any kind of long positions within the markets. I'm also looking at individual stocks as well and some commodities type plays. But for the most part, on the indices themselves, even though I love to play the indices and the ETFs, I'm just not real big on what I see in front of me. To the long side, I'll be very cautious. And I would recommend you do the very same as well. If you want to sneak in trades up here around 11,600 or higher, have at it, but I would be very, very cautious and cover profits as soon as you get into them. Make sure that you're not losing out on anything. I don't expect to see a big 500-point move or 300-point move necessarily within the markets themselves. Nothing that major. So if you can squeeze 20, 30, 50 points out of the market, I think you're doing okay based on what we see here with these little teeny tiny candles working their way upwards, grinding their way upwards. Much of what we saw here, though, see, once again, you don't know how far this thing will go. I mean, this thing just wandered its way upwards for weeks and weeks and weeks at a time. This thing could take us through January into February. Really anybody's guess at this point. But I think we are approaching a little near-term top, requiring a little larger pullback. We saw a little pullback over here, but I think this one might be a little bit more major than that. We could reach this or even below, maybe even back to retest this blue line on any kind of a drop. And that I would be watching below the 11,450 mark to start really watching closely for good short entries. NASDAQ 60 minute, same type of a thing. You can see us wandering upwards, hitting these overhead levels. Pushes above 2240 could sneak our way into the end of the year on some continued creep to the upside by the bulls here. Like I said, much as what we saw back in here. See how this consolidated, then wandered its way upwards. We're seeing the same thing over here. Exact same type of motion. Very, very slow. Yes, we're seeing declining volume, but I want you guys to really ignore this. This is coming off of Christmas week. So for those of you that like to put it all together with the volume, that's great. I certainly applaud you for that. But coming off of big holiday weeks like what we saw with Christmas, I would ignore it. We only had 4 days of trading, and even so, I didn't expect a whole lot of people to be trading, and that's kind of what we saw last week. Bulls did win it, though, as they wandered their way upwards, showing here on the weekly. Little teeny tiny black doji candle once again, but overall still up. So you can see that right around this 2150-ish area we have this heavier level of support. And over the course of let's see, we broke it here, retested here. So let's go from the close of here and just go 1, 2, 3, 4, 5, 6, 7 weeks. Almost 2 months has gone by, and we really haven't moved much more than about 80 points in the NDX. So you can see it starting to just wear down. It's getting tired. Still could see some little continued bullishness into the end of the year. Maybe one last push to kind of get everybody really on the bandwagon and bullish into the end of the year. That would really, I think, do a lot for portfolios, and they could say, hey, look how well we did this last year. Don't you love us? And then look for maybe a little larger pullback coming into January. SPX 60 minute doing the same thing too. This looks like a little 1, 2, 3. This is a 4 here, 5. This could be, like an A, B, C correction. So this could wander sideways for a little bit more, a couple days before it breaks up. But anything up over 1260, you might want to, start looking at maybe the 1270, as high as the 1300 area, even before this whole thing finally decides to give it up and roll over for a little larger pullback. Pushes back below this is really what we want to keep an eye on, though. That's about 1245, about 11, 12 points from where we are right now. Watch for drops back below that. That should add to some more seriousness by the bears at that point. SPX daily, same looking thing, just a slow grind upwards. Had a couple of really good days right here. But then, as you can see from that point forward, right around this 1220-ish area, it's been weeks of wandering upwards. We've done about 30, 35 points here over this time span, not making for like just really, really good, strong, bullish trading. It has been bullish. If you're a buy and hold type of person, this has worked out just fine for you. But if you're an intraday trader or only like to hold 1 or 2 days at a time, this has not been the most convenient trading for you. Now we're even into this more careful, cautious trading area right up around in here as we wander our way upwards once again. So not expecting anything too major coming into Monday. Things might not pick up till the middle of the week once everybody starts to get over their little Christmas high that they're on, and maybe back to work for just a few days before we then again hit New Year's. SPX weekly as well, same type of thing. Saw a little white candle up here last week. No major volume, but who cares? It was Christmas week. Point is, we came down, held this 200 beautifully. This has been a real monster for both support and resistance within the weekly. And now with it being broke, this still looks like a very clean 1, 2, could be 3, 4, 5. This could be 1, 2. This could be finishing up 3 with a further pullback for 4 and then a 5 yet to come to the upside. Still a lot of scenarios from an L8 wave standpoint. What we just need to be cautious about is how much further does this have to go before it finally runs out of steam and rolls over for us. Still looking at that 1260, 1270 area, then above that maybe as high as 1290 to 1300 once again. VIX daily saw a sharp move upwards. I don't really care. We've seen at this point some days markets are up, VIX is up. That's a little divergence, and they've both and all ended up in a sharp move to the downside by the VIX as people coming into Christmas, and I would expect into the end of the year, really don't have much concern over where the markets are going. We will be watching this obviously more closely starting now after Christmas to see if this VIX will give us any kind of indication for a further upward pressure, but as of right now, really nothing to worry about as it sits very nicely down here on this lower line that we drew in on the weekly. Apple 60 minute wandering around a little bit after it hit 318, did a very nice job of bouncing up to hit some overhead areas here up around that 325-ish area, then pulling back a little bit coming into Christmas, but overall still doing very well and holding itself up very nicely, as is that NDX, but a slow grind to the upside. If you caught it off the 20-day moving average, which was one of our targets to be watching, had a very nice trade for a few days coming into Christmas. Now we want to just continue to watch and see if we get any kind of further breaks to the upside in Apple, and that's up above 326 and back below 320, then 318, then 315 to the downside. FAS on a 60 minute. Here is the channel. I'm going to show you the kind of the channel that we're in. Bouncing off of this very, very nicely. Any sharp move to the downside, be watching this lower line for support and your upper line for resistance. Be very cautious with your trading. I don't necessarily like to mess around with things in the middle of a channel, but I do like that now it's above this overhead resistance area and it's held it for a couple of days. So further pushes to above 28 or somewhere around in that area could give you still some further pressure on the banks to the bullish side. In that case, that would push the FAZ down. This is the channel working its way to the downside. Any further pushes to the upside, up above that 975 mark, you could maybe play it back to about $10. I'd be watching very, very closely at that point. Anything to the downside, watch this lower line. Even below 930, or I should say 940 or 930ish, something down in here, I just watch this lower blue line very, very cautiously. This could be setting up for a finishing 5 wave, which would be like an A, B, C, D. So one more touch up here, and then an E to the bottom side, then a blast to the upside. So we might wander around a little bit with the banks. That gives us a good 2 weeks or so to work that all out. If that particular formation works out, that's what I would be watching very closely. And overall, bigger picture from a swing trader standpoint, you need it to break this overhead line. That's way up around 11.50 right now. By the time it gets there, it'll definitely be right around $11. But you can see what it's been doing, just wandering its way downwards. If you're trying to go long this stock, you're just trying to guess at a bottom, I'd be very, very cautious about doing that unless you're going to build that position slowly. All right, that'll do it for now. We'll see you again tomorrow night and see what the markets bring us. Have a good one. See you then. Bye.